So if you are legally married, those are the only two options for you. It's married file jointly or married file separately. A lot of times people will do married file separately for specific reasons, whether they live in a community versus, common law state, depending on, the income levels.
Think taxes are too confusing, too overwhelming, and too I'll figure it out later? Well, today's guest makes the most intimidating parts of your financial life ridiculously understandable.
Welcome to Living Not So Fabulously, where we turn real life money chaos into clarity, confidence, and freedom. Today, we're talking with George Azar of Bright Budget, the tax expert simplifying tax filing, helping couples avoid costly mistakes, and guiding modern families through an increasingly uncertain tax future.
Welcome to the show, George.
Thank you for having me. I'm so excited.
Likewise.
I know it's kind of funny to think about we're excited to be talking about taxes because very rarely does that happen, right?
Nerd alert, nerd alert.
Yeah.
I get that all the time. Trust me. Like your brain is weird. I'm like, I know.
Yeah. Right. So, George, most couples hear this phrase, married filing jointly saves you money. But that's not always the case. So, can you do us a favor and maybe just break down at a high level in plain English the real difference between filing jointly and filing separately for married couples?
Plain English.
Absolutely. Yeah, so if you are legally married, those are the only two options for you. It's married file jointly or married file separately. A lot of times people will do married file separately for specific reasons, whether they live in a community versus, common law state, depending on, the income levels, all of that. I would say the most common type of situation where someone says married file jointly saves you money is when you have one earner who earns more than the other one because the tax brackets essentially get expanded. So essentially, like if you have a high earner, their marginal tax rate gets brought down into a much lower tax bracket than if they were to do married files separately, which married files separately basically is the same rates for singled filing people. But there are some certain penalties and restrictions like standard deduction versus itemizable deductions and such. So yeah, it really isn't a one size fits all. It really does take planning and looking at your specific situation to see if jointly versus separately makes sense.
Okay, so if I'm understanding correctly, basically, if you're filing jointly, you're sort of averaging your two incomes, which could bring you down to a lower tax bracket. And in that potential is where you could be saving money as opposed to filing separately. Is that right?
Exactly. That's exactly it. So a lot of situations, like I have a lot of same-sex couples who file jointly because one of them makes, let's just say $50,000 versus one that makes $500,000. So if they were to do separate returns, the one who makes $50,000 is obviously going to be in a lower tax bracket than the person that's in, $500,000. But because they're filing jointly, the gap, if you will, is a lot larger as you jump into different brackets. Because essentially, for simplicity purposes, it's pretty much doubled. So, like, if someone makes $500,000 and they fall in the 37% tax bracket, they may now be only in the 32% tax bracket because that range is a lot larger.
And that's the benefit we have in our relationship.
I wish you made $500,000.
Don't we all?
Well, to be honest, that was actually going to be one of our questions. It was that the sugar mama or sugar daddy question of many. This is something that's, I think we're seeing a little bit more of it in the general population, but it was kind of a common thing for same-sex couples where you would see a considerable age difference or a considerable income difference. What maybe is there an impact when it is a big age difference?
It's not necessarily age as it is about source of income. So in that situation, if you have an older person, probably they have, retirement style income. Now, if it's a Roth IRA, essentially it's not taxable, so it's not going to increase the AGI, therefore it's not going to have any impact whatsoever. But if it's like a traditional IRA, somebody who, let's just say they're, 70 years old, and they're collecting, IRA distributions and all of that, and it's from a traditional, their tax bracket may be a lot lower than the person if they were, let's just say they were married to a 40-year-old who has self-employment income. Essentially, that may bring up the tax bracket for that retired individual. And then there's other things to take into consideration, like a self-employed person. You're not going to really see this tax savings on other sources of income, if you will. Like if there's like long-term capital gains, there that fluctuates as well. It's from 0 to 20%. So essentially, if you're bringing in somebody's income to that, where you would have been in the 0% tax bracket, but now you add in your spouse and it jumps you up to the 15% tax bracket, it may make sense for that person to file separately. So essentially, they're in a much lower tax bracket, so they could save on long-term capital gains. With self-employed people, there's the self-employment tax, and that's something that I really hone in on, especially I focus on self-employed people, is that that's a regressive tax. So regardless if you're doing married file jointly or married file separately, it's a flat 15.3% tax that isn't going to budge whether you're filing jointly or separately. So yeah, there's a lot of little nuances to the tax code. That's why it's very, a general rule of married file jointly is going to save you money is really just a lazy TikTok way of saying, that that's the way to do it.
All right. So if you're just joining us, folks, this is Living Not So Fabulously, where we turn confusing money topics into something you can actually use. We're chatting with George Azar of Bright Budget, the guy who makes tax law make sense. I think that's what we're trying to do here. So, George, you've given us a couple of scenarios here, but I think one of the other things that we hear is that there's also a marriage penalty. What is that? And when is it a bonus and when is it a penalty?
Yeah, exactly. And you know what's interesting about the marriage penalty? Because practically speaking, I don't see it a lot. I would say that essentially, in most cases, it is actually beneficial to file jointly because of the example explained earlier, as far as the tax brackets and stuff. But essentially, that marriage penalty is like certain credits are restricted, certain like the standard deduction versus itemizable deductions. Essentially, there's a penalty for filing separately, because if one spouse elects to do the itemizable deductions, then the other spouse has to as well. So there's these little nuances in very
Oh.
specific situations where it does make sense, doesn't make sense. So yeah, I would say that it gets a lot of coverage as far as there being a marriage penalty, but I would say practically speaking, it's very few and far between.
Oh, really?
I-
Yeah, it does get a lot of discussion every year. Wow.
I'm
It's like fake news.
I'm wondering if just because of is it maybe individuals who are in much higher income levels who might be, for lack of a better way of saying it, they have a little bit more notoriety, and they're the ones who are talking about this being a problem.
Exactly. I would say in most cases, it's the spouses make very similar income and they're high income earners. For example, like, there's the child tax credit. It phases out at $400,000, but for single filers, it's $200,000. So it's doubled. But
Mhm.
if you have two, spouses, let's just say, they make, $190,000, essentially there's like mathematical calculations that essentially penalize them for filing jointly, where if they were single filers and they had a child, they would have qualified. So yeah, I would say that it's not that it's not a thing. I would say that it's a case by case basis, and essentially, like, we would basically do an analysis to see if they are going to be penalized, because again, it's like, both, like, I have a same sex couple that both of them are high income earners, and so the jointly status really doesn't benefit them, because they both make similar income, and because whether they're filing jointly or separately, they're going to be in that top tax bracket. Essentially, that's
Mm.
where there's a penalty, if you will, for filing jointly, because they're just not, they both like cancel each other out, in a sense.
Yeah.
Yeah,
Yeah.
yeah.
Lucky them.
So yeah, right. So for like normal people who are middle class Americans, to what extent does filing jointly affect like student loan repayment plans, ACA subsidies, anything else that might be means tested? That would have an effect as well, right?
Yeah, that's a great question because especially with like the subsidies, the ACA subsidies. So, if you have somebody who, qualifies for the premium tax credit, but their spouse makes significantly more, pushes them over that $400,000, above the below the poverty limit. Essentially, then they're paying all that premium tax credit back, not to the fault of their own, but because their spouse now had just jacked up their AGI, which basically disqualified them from it. So that would be a situation where that wouldn't be beneficial for them. If they have like with student loan repayments, there's certain caps. It's an income driven type of deduction. And so again, in that same situation where you have somebody who may have qualified, but now you're throwing in this other mix of the spouse's income, it basically disqualifies them from taking that deduction. So yeah, there's very specific situations exactly. So like what I would do is I would look at each individual's income and basically say, okay, so running the analysis, you would qualify for this credit, this deduction, all of that. We throw in the spouse's income, it automatically disqualifies you. Well, then I also want to take a look at, well, okay, so you're not going to get the deduction, you're not going to get the ACA, but is the benefit of your spouse now being brought down into a lower tax bracket, is that benefit more than the benefit
Yeah.
you'll get if you were to claim those credits or those deductions?
That's really interesting. George, hold that thought for a second. We'll be right
Mhm.
back after we pay some bills with this commercial break. So welcome back to Living Not So Fabulously. We're back speaking with George Azar, the tax expert helping LGBTQ couples avoid costly filing mistakes. So, George, I wanted to ask you, just kind of is there a general kind of rule that folks could look out for to say, okay, we make this amount of money, or I make this amount of money, you make this amount of money. We should probably then work with an accountant to see if we can get any savings to reduce our tax burden. Or is this really every every couple needs to decide this for themselves as to whether or not they want to work with an accountant and see if there's any benefit.
I love that question because that's exactly it. So I would say one, it's the based on your source of your income. So if both of you have W-2s, I will tell you now, more likely than not, you are not going to benefit from having a professional do your taxes because, with W-2s, it's pretty vanilla. As long as you're taking advantage of your employer benefits packages, all of that, you're maxing out your 401k, anything like that, like us as practitioners, we can help guide that conversation and get you set up in the right, looking at your benefit package and making sure that you're maximizing your tax savings, all of that. But I would say the general rule is that if you have pretty vanilla income, your W-2s, minor interest, dividends, anything like that, I would say more cases than not, like I turn clients away that are in those types of situations. Now, some of them will push back and be like, "Look, I don't even want to think about this. I don't mind paying you X number of dollars to do it." Then in that situation, that makes sense. It's the opportunity cost. What are you gaining and what's the cost of that? If the benefit is more than the cost, then it's great. I would say that if you are in a situation like what we talked about earlier, where one of you has lower income and one has higher income, it may be worth talking to an accountant and making sure that you are making that election. I will say a lot of the self tax preparation softwares will help you do those analyses, but working with a practitioner does, I guess, ask questions and answer questions that you normally wouldn't have. If you have self-employment income, you have rental properties, all of that, that's really where the benefits of having a practitioner preparing your tax return really come into play because there's certain, there's like what we call the de minimis election, there's bonus depreciation, there's all these different types of tax loopholes, if you will, that practitioners will help you determine if it makes sense for you. So it really is a case by case basis. But yeah, generally speaking, plain vanilla income, you're probably better off just doing it yourself. If you have a more complex situation, then it would help talking to a practitioner to help you guide that.
Thank you. So, you brought up tax software, and I have just somewhat of a tangential question. And there's a lot of talk about sort of AI sort of stealing white collar jobs. And I know that in financial services, there's a lot of talk about, will we need financial advisors to the extent we do, or fund managers to the extent we're currently using them. To what degree are you concerned that, AI is going to take over your job?
Yeah, that's a great question. It's funny because I actually teach at a local university, and this is one of the questions that their grad students, and they're all just like, "Am I doing this in vain? Am I going to be replaced?" What my opinion on it is this: is that you can have staff level, data entry, tax forms being filled out by machines. The problem though is that because the tax code is so overly complicated, and that's a whole other probably podcast episode to talk about that, but because we as practitioners do have some sort of sense of I guess moral obligation and logical analysis that I don't think a computer could really do. Like there's some accountants that will take very aggressive approaches, and then there's those that take more conservative approaches. I don't think a machine is going to be able to do that. But I will say that on the staff level, the data entry, absolutely. I think that is a bigger issue. Now, if accounts are being replaced, it means that a whole bunch, and I've heard the same thing about, is there gonna be universal basic income? Is there gonna be, there has to be some sort of governmental intervention in order to, mitigate this massive job loss, whether it's regulating AI or it's providing some sort of social safety net for those who have lost their jobs because of that. So yeah, I love that question because it's so, ethereal and all that. But my opinion is that like I think accountants will still be around because of that judgment call that we have to make when we sign that return under penalty of perjury.
So, George, you've mentioned same-sex couples a couple of times here, and even with the recent Supreme Court signaling that there's interest in cases that could challenge Obergefell, and then what happened with the Kim Davis decision of them not wanting to hear it. We also know that there are many states right now that are lined up for this opportunity to bring even a different case and a different case and different case. So there's a lot of LGBTQ couples who are very nervous. From a tax perspective, what should married and unmarried couples be thinking about right now?
Yeah. No, I love that, and that's a very personal question. I mean, I also identify as a gay man, and, hearing all of this and the noise, I was very happy to hear about, the court deciding not to take up the Kim Davis case, but you're absolutely right. There's these states that are ramping up to basically do what they did to, Roe vote versus Wade, and so what I've been advising my clients, this has been, months, I would say since the beginning of the year and when we knew the election results and all of that, is that, you know, get legally married. That's my advice. If you know you're gonna get married, you wanna get married, uh, your wedding's planned for a couple years, at least get legally married because my understanding of what's gonna happen is that the federal government is going to push it back down to the states. So, California, if you live in California like I do, you'll be fine. There will be a recognition of gay marriage in that state, but if you're in a state like Alabama or something, a state that doesn't is pointing towards not recognizing that, essentially the federal government's gonna say, "Well, your state doesn't recognize it, therefore we don't." So I think that if you do get married now, there is going to be a precedent set that, essentially those that have a legal marriage are grandfathered in. So if you live in a state where you potentially have your marriage not recognized, at least there's going to be some sort of like grandfathered rule. So I always advise my clients, same-sex couples, get legally married, have your ceremony, in a couple years that you plan to do it, because at least you have that. Now, the other thing is that I don't believe if they do end up overturning gay marriage, I don't believe that the federal government is not going to recognize same-sex couples in those states where they do it. So I don't think we're going to have that situation where you file separate returns on the federal level and then joint returns on the state level. I think it's going to be a completely different situation, but you never know. just get married is my advice legally.
Yeah. Well, it's funny that you share that because because John and I, a long time ago, this is back in 2017, did a podcast episode with I think it was a tax specialist who worked for a major financial services company. And he shared with us the benefits of being married based on, on Social Security, the survivor benefits, survivor and spousal benefits. And John was nudging me the whole time saying, we need to get married, we need to get married. And it was after that episode that we made that decision to get married at the courthouse rather than having a ceremony. And we did the ceremony a year later.
Because you have to wait the 9
love
year or 9 months plus, or the end of 12 months, for each of those benefits.
Yeah.
Yeah.
But I think just to come on a final note, it's really sad that it seems like every 4 years there is this up for grabs decision as to whether or not our marriages are protected at the tax level or they're not protected at the tax level. That is a very complicated and frustrating process for same-sex couples.
Absolutely. I mean, you're playing with people's lives at this point, and it's more than just financial. I mean, before gay marriage, if you had a domestic partnership and your spouse was in the hospital, if you weren't a family member, you couldn't visit that person. I mean, you're absolutely right. It enrages me because it's, especially from the people who, claim liberty and justice for all. Apparently there's an asterisk on that. And so, from a financial perspective, absolutely. But from a personal and emotional level, I don't understand how people can't say, okay, I don't agree with your lifestyle, whatever, their terminology is, but I at least defend your right to have equality. And that just seems to be lost exactly every 4 years. It's infuriating. So there's so many elements of having marital status for same-sex couples that impacts more than just finances. It's dignity. It's being able to raise children. So it's a whole. There's a gambit of issues that I see with this very selfish decision.
If you and your spouse don't have a vanilla income situation, as George said, such as you have big differences in income, one of you isn't an independent contractor, it's likely that you don't need to have your taxes done by a tax professional. But if you do, please talk with a tax professional because it could save you thousands or even tens of thousands of dollars.
Plus, with the risk of AI, if you hire a tax professional, you save a tax professional.
Is that from Heroes? Thanks for tuning in. If you have questions or guest suggestions for us, just email yfpodcasts@yahooinc.com. If you like what you see, scan the QR code to follow Yahoo Finance podcasts for more videos and expert insights.
If you're looking for more advice on your future money, head over to Decoding Retirement, also on Yahoo Finance. And until next time, stay fabulous.
This content was not intended to be financial advice and should not be used as a substitute for professional financial services.